We're at this point in time where the technicals are turning very quickly positively, but the fundamentals are actually deteriorating, and sort of cutting through that noise to figure out what fundamental deterioration is really meaningful, how much was priced, has been the biggest challenge of the last quarter. Is we did have a 20% correction in stocks. How much weakness did we actually price when that correction rebounded as quickly as it did? What's priced in now appears to be close to double-digit growth over the next 12 months. Can we get there in an environment where we don't know where tariffs are headed, or at least we know they're going to close to 10% on average from 3 or so just 6 months ago? That's the biggest challenge right now, is cutting through kind of the day-to-day noise and the trading off of tweets and trying to figure out what's priced.
So, I mean, earnings just for this year, 2025, we started the year, they were 12, 13%, now they're kind of 7-ish, I guess. So the street's been taking down their numbers, I guess, but we still have 12%, 11% earnings growth for next year.
Exactly.
And so I think people are maybe pricing on next year's numbers.
Yeah.
My guess is there's probably still risk to those numbers.
Yeah, it's questionable as to what the catalyst is for that improvement into next year. If the comps are not materially easier in 2025, how do you get back to that double-digit growth in 2026 without a big catalyst? And normally the catalyst is monetary policy. In this kind of economic weakness, you normally get that monetary kicker that helps reinvigorate growth. And we're probably not going to get it this time. But if we do, we might get just a teensy bit of easing from the Fed.
Teensy bit is
teensy bit. It's very technical.
Very level 4. Gina Martin Adams is the Chief US Equity Strategist, Bloomberg Intelligence. It's a nice lengthy conversation here before David Rosenberg and Katie Kaminsky. Steve Chiavarone was in from Federated Hermes. They've been very good on stay with America, stay with growth. And he emphasized tech and Mag 7 has come back to where it's still painful, but you have to participate in Mag 7. With Nvidia this afternoon, how does Gina Martin Adams and your team participate with new money in Mag 7?
Yeah, I think that is a really critical question, because there's a difference between participating and having everything you own in the Mag 7. And we're still in this process of investors transitioning to a more diversified portfolio. That's the big story for 2025 to us, is you can't overweight Mag 7 in an environment where Mag 7 earnings are decelerating. You have to participate, you have to own, but you have to be relatively selective in how much you can overweight that extremely powerful group in an environment where they are no longer the earnings sort of accelerators on the index. That's going to continue to be the case for the next couple of quarters. I do think that there is a bit of an excessive captivation with this group still, and we're going to continue to have to work that out. But frankly, you've already had very substantial declines in these stocks to try to price in some near-term earnings risk. You've got a decent amount of headline risk still. I mean, you've got to be uncomfortable as a Mag 7 investor with what's going on between the Trump administration and Europe. Europe could very, very easily squeeze services industry sort of exposure to that economy in retaliation for any kind of tariff pressure that may or may not emerge. So that's a near-term risk. You've still got renegotiation of the sort of semiconductor supply chain risks by the Trump administration coming up. So you still have these policy headwinds. In an environment where earnings are decelerating, it's very difficult to go overweight Mag 7.